This video is in response. Let's start again. This video is in response to a question from. Oh, see if I don't do it first time, then it takes me 20 times. This video is in response to a question. Told you, didn't I? Got to do it first time. This question is a video.
Do it. This question is a video in response.
This video is in response to a question from Chris, who said, what's the difference between a holding company and a trading company?
No, it's not. It's a holding company, a holding investment company and a trading investment company.
Okay.
Holding trading company and a holding investment company.
That's what he said. This video is in response to a question from Chris, who asked, what's the difference between a trading holding company and an investment holding company? Now, just to give a bit of pretext, this is what a holding company basically is. It's a limited company which we're going to call HCO. And on top of it over here, you have individuals who are shareholders and they may be directors. And then what they decide to do is go and open more companies, because for the world of property, because they want to do property transactions. And then they'll have different companies for different reasons, partly because they maybe are doing property development, so they want to keep each project separate for very different reasons. And if you want to know more about that and how a holding company works, then click this link here and watch this video, and that's going to tell you in more detail exactly what a holding company is for and the benefits, because I don't want to cover that again, because you can watch it there. And this basically then becomes your holding company structure, and depending on whether you're doing trading or investment, dictates whether it's a holding company for trade purposes or investment purposes. And if you click this link here, I'll have a slide for you telling you how we can demonstrate that we have a trading company by looking at the badges of trade. Now, what usually happens is an investment company, to keep it really simple, is one where you are buying property and holding on to it. Now, you might be thinking, why would somebody have 3 separate companies? Let's say somebody's doing a commercial conversion and they buy a property and create 10 flats, they end up selling 5 and they keep 5 here. Same again here, and they might end up with 4, and over here they might end up with 6. And they've sold all the others, and therefore they're holding on to this. So this becomes a investment company, but they might also have other companies which are still doing commercial conversions or buying land and building houses. So this then becomes a mixed company. And if it becomes a mixed company, then you might have a problem, because you might lose trading status. It's not a good idea to lose trading status, simply because the government wants to incentivize and encourage people to trade. So it gives you more tax reliefs and benefits and allowances. So if you click this link here, you'll see a list of all the tax benefits available to trading companies which aren't available to holding companies, and the difference is significant. So if you end up in this scenario here, where you've mixed trading and investment, if 20% or more of your turnover, profits, value of assets, or the time spent on the investment side is more than 20% of the entire group, then you lose trading status. And the biggie, by the way, is this one here. Because generally speaking, if you're trading, your turnover will probably be higher than your investments, especially in the early days. After year 150, by the way, you'll have so many investments that your investment income will probably outweigh and outrun or out-earn your trading business. But no one's going to be running their company for 150 years. So for most people, the trading side usually creates more turnover. And again, until you get to a certain scale, it'll probably create more profit. Okay, and because it's trading, then there's more activity going on. The time spent will be higher, but the assets test you are going to lose. And if you lose that, it's not going to be a good idea. So it's very simple in terms of how trading investment works. Sometimes people get confused because they're not used to it, or it's not talked about much. Where possible, you want to have trading status. If you're buying and holding onto property and renting it as residential property, then it's going to be investment. If it's a commercial property, it's still going to be an investment if you're renting it out. So you want to make sure you just don't mix the two. Sometimes you can't help it. If you do, then you can do a demerger and move the trade or the investment away into a new holding company structure, which I'm not going to cover for you. That's basically the difference between a trading holding company